Thank you for having this hearing, Mr. Chairman. And I think it's good to begin the discussion. And certainly we have to address the doubling of the subsidized Stafford loan, but we have to go on beyond there. Obviously, we can't stop there. We have to think a little bigger. We have to look at the responsibility over the whole realm of that. But I wanted to try to put this conversation in a little context. Most of my constituents think it's incredibly unfair that Wall Street banks can go to the Federal Reserve and borrow money at almost no interest rate at all. Yet they turn around and look what they have to borrow to go to college, and they find that comparatively exorbitant compared to that. Now, the people on Wall Street are the ones that just about wrecked our financial system, taking these reckless risks, and yet they can go and get a deal. All that the people are trying to do with the graduate is add to the nation's productivity, innovation, and creativity, but they get a bad deal in comparison on that. So that's the context in which I work. A lot of people coming into my office and want to know what the heck's going on. Now, Dr. Lucas, you mentioned that one of the reasons, and correct me if I got this wrong, but one of the reasons why interest rates should increase and not be fixed is that lenders need to be assured their return on capital will increase to account for that inflation. Is that fair?
I said that if inflation were higher, that is what the market would require.
All right. And you're saying if that doesn't happen, then it's a cost to the taxpayer?
I'm saying that when you fixed loans as they are now, when inflation goes up, you're still charging students the same rates, which makes the loans further below market rates.
Right, below market rates on that. But what if the lender was a not-for-profit? What if the lender was somebody that said, you know, I'm happy to cover my costs, and I think that there's a value to covering my costs and not getting that profit back, or on that basis, because I think it's good public policy to have more people graduate from school, increase our productivity, our creativity, and and all that going forward. Then that's a whole different consideration, right?
I agree with you completely that it may be good public policy to keep the interest rates on student loans low. My comments about changing the accounting for them had to do with the transparency and recognition of the true costs, which would make it easier for Congress to decide to use student loans in judicious proportion to other types of aid. But
we'd get to see what our public policy was, then, is what you're saying. You'd get a transparency and you'd know what profit you weren't making and be able to decide whether or not that was commensurate with the policy pluses that you thought you might get. So they could make that kind of decision on that basis. And I think that's great. And I think that's the kind of discussion we ought to have around here, but I don't think we ought to lose sight that it's, we're not a for-profit organization, and we talk all the time about our rhetoric speaks to the idea of needing more college graduates, and all of our employers need it, and we need it for our productivity and our creativity and our innovation. But our policies and our interest rates go counter to that, making it difficult for people to pay off loans. Some people don't even go to college because they see the frightening cost that's going forward. So I think we ought to have that discussion, but not lose sight of the fact that there's a value to not making a profit so much. And if we thought we had to make up that money somehow, maybe we wouldn't give billions of dollars in tax subsidies to oil companies every year. So basically shoveling money out the door to them as a gift with no real public policy plus back on the other side. Or if we thought we had to make it up, maybe we'd put a transaction tax on those very Wall Street people that almost drove us into ruin and slow down the volatility of the electronic trades, and at the same time, for the value of what the proposal I've seen is a cost of about $1 cup of coffee, $1 for every 800 cups of coffee, and we'd get a plus on the way the market runs and also get them to start contributing to fixing what's going on in the country and get us more graduates on that. That's all I really wanted to cover on that. But I do think on the other part of that, Mr. Chairman, is that at some point we have to start looking at making sure that the people that have these college loans and they're getting collections on the other end get treated the same as people that have borrowed for other purposes. And Donald Trump can walk into bankruptcy, clear his record, and go out and start investing the next day, but a student that falls upon some calamity and can't repay their loans cannot go into bankruptcy at all and never gets a restart. And I have a number of people that come in my office that just keep having trouble with the collection process, penalties, interest, going up and up on them, and they seem to never be able to get out. So I think we need some consumer protections. We need to take a look at why students are one of the very few groups that can't get the protection of bankruptcy that our Constitution generally affords everybody else, and then we'll have truly looked at this on a larger scale on that basis. So I thank you, and I yield back.
Thank the gentleman. Mrs. Roby.
Thank you, Mr. Chairman. I'd like to thank all of the witnesses